I have added a bit to Ethereum, and I'll add more. I haven't yet. I will broaden out and do some more stuff. I'm trying to decide what to look at. I'm probably looking at some of the beaten down DeFi tokens and some other areas of the market that have been kind of beaten down, because we've had this kind of big sloppy sideways range now for months and months and months and months and months. But some of the market's been killed within that. So I'm starting to look at that stuff. Haven't yet deployed any money to it, but getting there. But have been buying ETH.
If you were a more experienced trader, maybe been in the market 2 or 3 years, and you have, say, $50,000 to allocate, what would you look at allocating right now based on the previous trends that we have seen and where we're looking to head moving forward?
So I look at it in terms of network effects, what networks are growing within crypto. So Ethereum's the kind of biggest, most robust network in terms of the number of developers, the number of people investing in it. So that makes that one of your base, investments. Bitcoin, being the OG in the space, is another base investment. But then you want to start probably going a little bit further out on the risk curve. So we're seeing these layer ones, stuff like Terra, Avalanche, and probably Solana. Interesting. Then I think maybe 2022 is going to be the year of interoperability. So we're looking at, Polygon, Quant, and a few other things that might give us those opportunities. And DeFi's been quiet now for a year and a half. So I think we might see the next wave of DeFi, along with NFTs and social tokens. So there's a lot to play for still this year, lots happening. Bitcoin needs a shot in the arm, essentially, from network effects, because we're seeing less activity than we are elsewhere. So you need to drive new participants into the space. One thing I do know is institutions are coming into the space, but I think it's switching a little bit from the direct Bitcoin access to VC access and hedge fund access and other ways. So I do think we'll see some more balance sheet stuff, but the problem is the accounting laws still don't help. So for gap accounting in the US particular, they have to mark it to worst price. And so it's a real nightmare on a balance sheet. So until that gets resolved, we won't see many more corporations do it. Flip side, we're seeing all the banks building crypto businesses, and of which Bitcoin is the predominant one, Bitcoin and ETH again. So I do think the banks will have them not in their balance sheets essentially, but in their trading books. And I think we will see more pension funds and institutional investors. And I think this year might be the year of the sovereign wealth fund. It would be really surprising if Dubai, Abu Dhabi, Kuwait, I think Singapore already has it on their balance sheet. Saudi, I think. There's a whole bunch of these that I think will start doing it. They've already been doing VC investments in the space. I think they'll start coming into the space in terms of physical ownership of Bitcoin. It's the real sign of acceptance. In terms of adoption, yes, it allows other pension funds to own it, other large pools of capital. Now, the key thing about these sovereign wealth funds is they have gigantic assets. So even a 0.5% weight is billions and billions and billions of dollars. So when they come into the space, it's going to be meaningful, and they'll be in it forever. So that's something to really keep an eye on, because when that starts happening at scale, it'll move the price for sure, and it'll drive pension funds to come in and kind of other players.
What are you expecting from Ethereum price from this, and also the Ethereum price structure building up to ETH 2.0?
So, it's the structure leading up is I don't know, because there's a bunch of things going on, which is the network's been slow because retail investors have had their earnings crimped by inflation, so they've had less marginal money to be able to put in. There's the Fed tightening, central banks tightening. So there's a lot going on in this picture right now, which is why these prices have been wide-ranging and sideways. Usually, these big events are a turning point one way or the other. So if you went into it at a high in ETH, much like we went into the ETF or we went into the Coinbase listing was the absolute high to the day. Because what you did with the Coinbase listing is you gave people another alternative. So before they were forced into opening Bitcoin accounts, then they didn't have to, so they bought the equity, and you lost billions, tens of billions of dollars of demand. So it depends what happens to ETH 2.0 and where it is, because if the price is at a high, then all of the people who've been staking are likely to take profits when they can unstake. Now, when they unlock that stake, everybody else in the market knows that there'll be a seller, so you'll force them out at a lower price. I don't really know. I was expecting ETH to have been stronger into the back end of the year, and so therefore I was expecting this whole thing to be at a high. I just don't know yet.
But you did buy some more ETH.
I did.
In January, in 20.
Oh yeah, I'm still bullet. I mean, I haven't sold a single thing. I've done nothing but buy for 18 months, and I haven't sold a single thing. 20 months now. So if you think about it, what makes a network really robust is not only investors in it, i.e. token holders, but when people are developing on it, and then you're developing other projects on it that also have investors on top, you're creating network effects. So if you think of ETH in those terms, so there's now demand for the network, which is why ETH is so expensive, gas fees are so expensive, because everybody wants to use ETH. Okay, and then you've got the other phenomena where those expensive gas fees are going to burning ETH. So what you're doing is taking ETH out of supply as well. And that's, I think, the key reason why ETH was up 450% last year and Bitcoin was up 60%. It's to do with the robustness of the network and that burning of tokens, and the fact that Bitcoin doesn't have Ethereum, doesn't have NFTs, doesn't have smart contracts, it doesn't have any of this on it. It's got the Lightning layer, but the Lightning layer basically what it does is batches a bunch of transactions on one blockchain slot. So you're actually not using vast amounts of the network. So I think that's why Ethereum did so well versus Bitcoin last year. I think that, and I've been alluding this for some time because it's stuff that I'm working on that I can't really talk about, but I think this is the year of social tokens. People don't really yet, I talk about it, people don't really get it. We're seeing Bored Ape start with the Ape token. There's some of these, but these are still small scale. We're going to see some gigantic communities tokenize, and we'll see the power of token economics. So that's the big thing that people aren't aware of because they haven't seen it yet. I did think Bitcoin would end up much higher than 100,000. I thought it was close to 150,000, and it stopped at 69,000 wherever it got to. And so I don't know if I'm qualified to make them a prediction, but I stick with, I use the logarithmic channel and the upside for Bitcoin if we get traction again, particularly if we end up with some central bank easing, which I think we will get the last part of the year or allusion to it. I still think Bitcoin can probably do, it could probably do 300% or so this year, and ETH could do more.